onto the largest ever follow-on public offering that we have seen in the country. Yes, I am talking about Adani Enterprises, 20,000 crore rupee mega FPO. We've been hearing about it for a while. It is now official. And in fact, with that, I would now like to invite the group CFO of Adani Enterprises, Jugeshinder Singh, popularly called Robbie at the conglomerate, is now with us. Thank you so much for giving us time today. There was, of course, a press briefing also that we saw last week. And given the fact that this is going to be the largest ever follow-on public offering so far, what gives you the confidence that this is going to be a big success? It'll be fully... There's a 10% discount also that you provided as far as the current market price goes. But it's very, very large issue that we're seeing the largest so far as a follow-on public offer. Why are you so confident?
No, I think that fundamentally the rights issue doesn't achieve one objective, which is expansion of the share register. So when we are doing this issue, which is a follow-on public offer, it brings in new shareholders, and that's one key fundamental objective, is to expand the share register and give the participation to the retail investor. And in this issue, the retail investors would be 35, HNI would be another 15%. So there's actually 50% of the issue size is kept for retail/HNI investors. So currently in our share register, we don't have 50% retail. So if we do a rights issue, we'll be limited to that 1%. So that completely defeats the purpose. So what we have to do is the best way to expand the share register is to do this. And it allows us to expand share register, bring in the new investors, and in that new investor, the majority will be retail/HNI. So fundamentally, that is what we want to achieve, and that's why we've structured the issue, we've designed the issue in the manner consistent with what works best for mom and pop retail investors, including HNIs.
You will be deploying most of the capex towards green energy business, airport, and road infra business as well. Will you also be looking at reducing the proceeds of the debt from the FPO? And is there any timeline prepared for listing these companies? In the past, we've also seen Adani Group doing the same to create investor wealth.
That is actually the fundamental business of Adani Enterprise. It behaves as an incubator. It's been that way for the past 20-25 years. And so our objective is, once each individual business is sufficiently robust that it can meet its own investment planning through its own capital management, that's an appropriate time to demerge them and hand them over to the investors of AEA, which we've done in the past in relation to, if you look at Adani Ports, Adani Power, Adani Transmission, Adani Green Energy, Adani Total Gas. I mean, those 4 or 5 businesses themselves are nearly $200 billion worth. And more importantly, you know, and sometimes these things get missed in understanding, where people just there's too much desktop analysis that goes on, is that not only have we created businesses which are worth billions of dollars in value, but a bigger and more important element for us is that these businesses are also like unicorn in cash flows. Adani Ports, over 1 billion of EBITDA, closer to 2 billion. Adani Green, almost touching 1 billion of run rate EBITDA. Adani Transmission, almost nearly touching 1 billion EBITDA. And Adani Total Gas, now at 300 million odd EBITDA business. Adani Power, over $1 billion of EBITDA. So what we've done is, not only have we created high value businesses, but we've created businesses that are significant cash flow generators and massively cash flow positive businesses. And this, in the incubation world or unicorn world, you know, this is one of the missing things. Do the businesses produce free cash flow? All of our businesses that have come have produced free cash flow, and the same we expect going forward, because our core investment philosophy remains the same. They invest in the core of infrastructure, which is either transport, logistics, or energy and utilities. So even the businesses we are incubating today, if you look at airports, roads, data center, and the hydrogen business, at the current stage, they are also cash flow positive. So that's one part of where Adani Enterprises focuses on.
Sure. So, Mr. Singh, any timelines that you can give us regarding the listings? Anything that we can expect, say, in the next 1 year?
No, nothing in the next 1 year. We've done Wilmar IPO, which is independently listed last year, But our plans will be that these major businesses will be ready somewhere between 2025 and 2028, which I mentioned a few years back, and we publicly said last year as well, and that timeline stays.
Okay. And does this fundraise completely suffice your capex needs for FY24, or would you need more?
No, this is the equity element of the capex. So yes, it actually suffices. The planning is done. Equity planning is done 3-year rolling. So it suffices actually the equity requirements that are required by the businesses over the next 3-year period. And so each 3 year we roll our equity planning in the manner, and that's how we design from an equity perspective, the capital management plan of the businesses.
Morning. Now around 4,000 crores will be used for your debt repayment, and your gross debt will come down by about 10%. Going forward, where do you see your debt figure?
No, I think that part of with due respect, I think in incubation business, if this is one of the missing pieces, and we wish that in India had incubator index or India had utility index, or somebody could explain these things. But nevertheless, so it becomes our job. Now, as an incubating business, what we are doing is, when you say the debt repayment, we are setting up the capital structure of the incubating business. Okay. So when we repay that incubating business, for example, roads or airports, will pay its debt back and have its balance sheet set up appropriately on a risk basis which is correct for that business. Now, if in the future we incubate a new business, initially Adani Enterprise will give a shareholder loan to that business and set it up. And then when we do the risk-adjusted investment analysis of that business, we will determine how much equity support, credit from a credit point of view, from its growth point of view, to meet its own requirement. Then that will determine how much equity then we inject in that business. So exact process we are going through now, which we've done in the past also for ports, for transmission, for green business as well. So it's a process of recycling your capital to continue to incubate new businesses, as distinct from changing the fundamental nature of capital. Okay, so that's not altering in relation to this issue, because the individual business's capital structure is not dependent on what AEL does as an incubator. So when if they want to borrow, they'll borrow more. If they don't need to borrow, that will be determined by those individual businesses and not AEL.
Appreciate your time. Thank you so much for joining in. So that's the word coming in from the CFO of Adani Enterprises. The FPO is going to boost the retail ownership. The debt to EBITDA is less than 1, and they are deleveraging quickly.